Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody, guys. Today we will take a look at the dollar index because yesterday, as you know, it was very important European Central Bank decision on the quantitative easing program and on the period that it will be kept through. So it's really very important, and it leads to far-going consequences on the financial markets, especially on the euro currency and on the dollar as well. So yesterday we saw really dramatic action, and it just returns us to the same old question. So whether it makes sense to trade the releases, the meetings of the central banks, because you could get different short-term patterns and bullish patterns that have been formed yesterday as well, but they decide nothing. So actually you can't predict what really will happen, and any bullish patterns that even could be formed there so easily will be erased by the fundamental event that will be released. Although, guys, in general, the decision that has been made mostly supports our long-term view that we have talked about in our recent euro currency weekly research. So if you remember, we have discussed the Committee of Traders report that euro currency position is overextended on the long side, and sooner or later the deep retracement should start. So currently it has limited upside potential. And it's all this stuff is very important for longer term analysis, for the understanding of the perspective in months on euro currency. But most traders who watch our videos are trading on the small accounts. They do not have millions on the accounts, and they trade the short-term perspective. And as you can see on the short-term perspective, despite the patterns that have been formed, recent average comments from the European Central Bank just has raised all of them, and market has dropped, following the fundamental tendency, the long-term perspective, long-term analysis. So what conclusions could be made from the European Central Bank decision? So just in two words, it means that we will not see any rate hike in 2018, because the program will last till the autumn of 2018. Second, it will be a very good situation for the European currencies and the companies. Sorry, not currencies, equities, of course, equities. And also, it's really important for us, it probably will lead to the further downward action on the euro currency. Why? Because the major action from the Fed Reserve for the rate increase, and we expect in 2018, and it seems that investors still underestimate the real impact and strength of the rate increase that will follow in 2018. And on this balance, that European Central Bank will keep this quantitative easing program while the Fed will take the most aggressive steps on rate increasing, definitely will press on euro currency. That mostly confirms our idea on the dollar index, guys, because if you remember our long-term analysis of the dollar index, this is just the beginning. So if you will take a look again on the monthly weekly chart, you will see that in fact dollar is forming here some kind of the hand and shoulders. Market has formed bearish reversal swing this weekly chart, guys, and now its deep retracement is falling. We expect that this deep retracement will be precisely the cycle of the Fed Reserve on the rate increasing in 2018. That should lead dollar index somewhere to the 100 even point, something in this area, maybe even higher, slightly higher. And after that, the hand shoulders pattern will be formed on the dollar index. So as you can see, this policy divergence between the European Central Bank and the Fed Reserve leads to very significant and serious consequences on the financial markets. Also, guys, I would like to show you the chart just to confirm this idea. And take a look at the United States Treasury bonds, 10-year bonds. This is weekly chart, guys, of the 10-year bonds, and here you clearly could see the market is forming head and shoulders pattern. So butterfly has been formed recently. In the May of the 2017, market has skyrocketed to 10.6 yield. Now market stands on retracement, but at the same time you can see this also bullish reversal swing. So on the daily, on dollar index, we have the bearish reversal swing and potential head and shoulders. On the treasury notes, we also have reversal swing and potential head and shoulders. So if you will calculate the possible target of this ABCD action, you'll see that the yield really could reach an area around 3% or even higher. So this could be a real significant action on the treasury bonds. All this stuff will press on the United States equities. So as you can see, the fundamental background of this all processes that we see right now on the financial markets is very serious. And it's far going. It's not just some short-term setup. It's really will lead to the significant consequences, guys. So in the short-term perspective, this action that we see and saw yesterday is just the beginning. So it's just a minor part of the action that we should get within the year. So on the daily chart on United States dollar index, we have right now two nearest targets. So the first target is 1618 extension of this butterfly that's forming here. It's approximately 95. And next target is target of these head and shoulders that we have discussed here and probably within a couple of weeks. So it stands at 95.86. So these two targets we'll be watching for probably next week. But first, as you can see, market right now stands deeply overbought. This is financial market, guys, and they do not like to stay in overbought and short conditions for a long period. So that's why maybe in the beginning of the next week, maybe even today, we could get some starting of the retracement here. Minor retracement could be formed. But at the same time, we would not want to see very deep retracement. So market should stand first above the neckline, definitely, because we're turning back inside of the head and shoulders body. This will be not a good sign. Hardly this will happen, of course, but it's just that's why we are mostly will be watching for this most recent swing for retracement levels that could be met. So for that purpose, we could use 4-hour time frame chart, and here we have two levels. Also, guys, take a look at market has completed this AB equals CD target today in the morning. So CD leg is very steep. That's why definitely it will be some upward continuation, but still minor retracement is still possible. So there are just two levels that we could keep an eye on here. It's first 94.22 is the first free fib support, and second 33.90 confidence support. It also coincides with the neckline of the hand and shoulder, so hardly market will drop further. So either this level or that level should hold retracement here. And after that, we expect that upward action will continue. So if you have missed the opportunity to take position yesterday before the decision of the European Central Bank has been announced, so don't be upset, because this action will continue and this will be a lot of chance to take the position later on some pullback. So as you can see, guys, it's a very thrilling situation right now is developing on the financial markets across the board, in the forex market, and dollar index, on treasury bonds, yield market. And it's very important, because when you know the direction for a considerable period of time, it is easy to trade. It's easy to take the position with these directions. So let's see how the situation will start to develop from here, and let's watch for a possible minor bounce where we could think about taking the long position.